What is going on, guys? It's so good to be back. Today we'll be looking at how to get the best entries in the forex market using the smart money concept. Let's not waste no time and let's get right back into it. Looking at these two things. One, it's where the market is coming from. The market is coming from this high, okay? This is the high we're working with. So we have that area, the whole push to the downside, and we have the middle of that area. That's all we're working with, okay? We have the high, we have the middle, and we have the last low. Now, what you want to see is the market coming to the half of this area. When the market comes to this half of this area, that is what we need to see for the market to come and fill in these candles, okay? Every candles, as we said, is what? It is liquidity, okay? There is not just lows being liquidity. Every candle is liquidity because they've been pumped orders in those candles, okay? So we have that area, the middle, and we have that nice low, which is the last candle to the downside. So this is all we're working with. You are not looking at anything else. You are trying to find an entry, okay? So what you want to see is the market coming to this area. You are not touching the market unless it comes to that area, okay? If you are not confident entering the market on the lows of the lows or on the old low, wait for the market to come to the middle. You can call it equilibrium, whatever, but it's the middle, okay? Because we are working with the top, the middle, and the low of the market. So to those who say, I always get taken out if I was looking at the market, or I was looking at the market to come to the lows and then it comes all the way up like that. For instance, a push here, come back down, and then a push to the upside. So your entry is somewhere here, okay? So most people will not be comfortable with that as we are working with beginners here, okay? We've all been there. So you want to see the push to the upside to this area, the middle, 1, 2, 3, and to that area. So this is your point of interest, you guys. Let me just put the box right here. This is your point of interest because this is where we'll come and reach our discount and come to the downside, okay? To what? To these candles, okay? So we're expecting a push like this. A push, come to that area, a push down, and a push to the upside like that. Okay, Nolu, I'm not confident again because I have not yet find my edge in the market. That is fine. What you need to understand, when we come to the middle of the chart, we will take an order, come back down. Your confidence should come from A, B, C. So your C should be your entry. You come to the upside. Now, if you're not confident again, because of that leg, wait for this leg. This leg is open for an entry because where they have been before, they will come back to do what? To close and go to the upside. So wait for the market to close and then we'll push to the upside. Now, what you want to see is when they come there, let's delete this. When they come there here, and they come here, if you're not confident still to enter on A, B, C, wait for a nice candle there, rejection, and I will push to the upside, okay? Where should I get out? Where we started, right here. You're working with two things here. You're not complicating anything. The first high, the middle, the end, where the market was, or last printed a candle there, the end there. And then if you're still not confident, they will go to close the middle. Then they will close this candle as well, push the upside, come back down. They have to come back down because why, guys? There is orders that is left on this candle when they were pushing to the upside to close that level of a discount. So when they push to the downside, they coming to close. So you are waiting to enter right here, okay? This is where is your entry, sorry. Let's like that. So this is your entry. If you're still not confident, again, there's always a chance they will come back to do something like that and push to the upside. This, again, is your entry. Work with the two legs. This is what I've been saying in the channel. If you watch the videos full, okay, you would understand that we work with only two legs in the market. We are not looking at a lot of things. We are only waiting to see our two legs, and then we push to the upside. If there's no leg, that means there's no retracement. That's that, okay? So let us now delete this so that we can see that nice entry for ourselves, okay? Want to see the market coming here, you guys? Want to see the market coming here? Then from there, we want to see a push down. So when the market is pushing down, if you're not confident, you're not going to come down with the market. You are just waiting for an entry when they're done with that leg, okay? So now, let us see how this will go. There. Here's our nice push now. Remember, we are just waiting over here to see if they can come and give us a nice rejection to the downside for that middle of price right there. Nice. Those who are not confident to enter, you can always wait. It will come back. There's no panic. It always does come back. Anyway, so this is what that's it. You see the rejection. The rejection was right here on the middle of the chart. So this middle is your point of interest. I repeat, the middle is your point of interest. Okay, so we're having a nice push. We saw that rejection, okay? Then we will see a nice push to the downside. So going back to A, B, C, and D, okay? That is your exit. Your exit is where the market started, which is where the equilibrium right here. So you can exit here if you want, if you're not in a hurry, or if you're not a swing trader, you can just exit there, or you can just hold it all the way to the upside, which is something that I would do because of it's something that I'm used to, okay? The entries are always the same. I don't change nothing. I just wait for the market to come back to me. If I want, I will push down with the market, but most of the time, I'm just waiting for my C over there. So that's now our exit, okay? So we want now for them to come at least close over there for us to get an entry, okay? So we're going to go long, which is we are buying the market to see them coming back to the upside. Okay, we want to see a nice push there to the upside. Let us see how we can do this. Right now, we're seeing now that nice area and very nice. That is amazing. See, we look at that rejection. What does that say to you? If there is a rejection like that, it simply means that they are done taking the orders, right? This is now a playback replay, we know that, but this is what we always do every single day. You know, if there's no entry, there's no entry. If we lost, we lost. It's okay. We don't mind because there will always be an entry. This is a nice setup, you guys. 3%. Imagine if you had 100,000 funded account there, 3% is very, very good for you. So we can see the rejection again on the level that I've drew before the price took action there. I drew that level. Now for me, this is a confirmation to go in. Stop loss can be below that low, or because I use orders to go in the market. So I would literally just put my stop loss below here because of I now swing, because of I have things to do. I no longer have time to go in and out of the market. So I will wait over there to go in, right? And then I would take my profits over here. That is nice, 4%. But for now, I'm talking to people who want to scalp this or people who want to day trade this. So where the market came from is where you get out. Where we started on the equilibrium, you get out there because it's going to come down again because this is the magnet. Okay, that's the magnet for price. So you need to be out as soon as possible on that high so that we can not lose our profits. You get what I'm saying? Oops, lovely times. Now, look at that. So somebody will be like, oh my God, it's coming down. Market will always have to come down because I said to you that every candle is liquidity because of it fluctuates ups and down because there are people who are buying, people are selling on the same candle, right? Because there's different types of traders. So you shouldn't panic when it does something like this, but always put your stop loss on an area where you know it would be good, okay? Some people don't trade with stop loss at all. That's also their thing. But I think that if you can use this style, I think you would be good to go. Just look at this movement, you guys. So beautiful. 4%. We were not looking at any time frame. We looked at one time frame. We saw that this is our first high. We saw where's the middle of that of our chart. We saw that, okay, this is the equilibrium because this is the half, or you can use a ruler if you're not confident again, then you can have that level there. Then this is our last area of price. And then we wait. We don't care if price comes up because price will do something like this, push up, come close this candle, come down, close those who entered early, but we don't care about that. We would enter when price comes to the middle, come back down on our C. That is A, B, C. C, we enter, okay? Stop loss below the low, we push to the upside. That's it. Simple as that. There's nothing else. That is just how you read the market. That is just without using anything fancy, without using anything on your chart. You can literally just look at price and wait. And then price will come back to you and you done with your trade for the day. That is 4%, could be 3%, could be 2%, is up to you. Now, people call this supply, sometimes the supply and demand level, doesn't matter. It's okay, everything works. But this is so good, it's so powerful. You need to try one of these, you guys. They're very good. So if you enjoy the video and you get something from the video, please do comment. Thank you so much, you guys, for your support, and see you again on the channel. Cheers.